Let's talk about a basic owner's page now. So I'm going to click on Tesla Motors here, and this is going to tell me the institutional ownership of Tesla Motors. Institutional ownership pages are really the pages that Fintel is most known for. This is kind of how we got started 6 years ago. We've put a lot of effort into this. We track 13F filings, we track import filings, which gives us a much richer data set and allows us to find these short positions rather than just the long positions. Now, if you were to go out and compare our numbers to other websites like NASDAQ.com or like Yahoo, whatever, you're going to find that we have a lot more owners on record than these other sites because the other sites are only tracking 13Fs. And so I personally believe that our numbers are a little bit more accurate, but it's obviously debatable, right? This is kind of how we look at it. So with Tesla, I can tell you that there's 3,881 owners on record based on SEC filings. Of those, 3,729 are long only positions, 51 are short only, and 101 are long short. And this change of 16% has to do with this total. So there's been an increase in interest in Tesla. We also look at the average allocation, and there's a lot of people that look at like just the total shares, right? If you look at the total shares, 542 million shares, 52%, that number has gone up. The institutional ownership long has gone up by 15 million shares in the last 3 months. That's an increase in 2.96%. Well, that's interesting, right? That certainly is kind of one basic way of looking at institutional sentiment, because that's what we're trying to find here. We're really trying to understand institutional sentiment. But I think a better way to look at this is not to just look at the overall total shares that are being bought, but you look at the allocation that a fund dedicates to the security. This is kind of like the market share concept that we had, or the share of wallet. If I'm a fund and I have $100 million, how much do I allocate to each company is really the best indicator of how well I think that company is going to do. And so what we look at here is we look at the allocation of every fund to a security, and then we average that allocation, and then we look at the changes in that average. So in this case, the average allocation is 1.41%, which is pretty good, actually. And that average allocation has increased 21% in the most recent quarter. So despite those big bearish positions we saw, the average allocation in Tesla has actually gone up by 21% in the most recent quarter. So it's actually pretty bullish. And then we kind of roll all this into this kind of score. We look at the total number of owners that changed in the last quarter. We look at the average allocation in the last quarter, and we put those into a two-factor model, and we give you a score from 1 to 100. 90 is actually really good. That means that the institutional owners are really accumulating Tesla shares right now. So we've talked about the basics here. Here's a little chart. Here's the ownership accumulation score, which I just explained to you. The put-call ratio looks at basically what we talked about before. We looked at the total puts and divided by the total of calls. And if the number is greater than 1, then it's bearish. And if the number is between 1 and 0, it's bullish. And this is the chart here, okay? And then here's the 13D filings and 13G filings. So when an entity of any kind, person or otherwise, acquires at least 5% of any publicly traded companies, then they must file a beneficial ownership report. So that's a 13D or a 13G. Now, typically, if an investor intends to influence management of some type, then they're considered an activist investor, and they must file a 13D as in Delta. But if they're a passive investor, then they need to file a 13G as in G as in golf. So that's the difference between a 13D and a 13G. So what you're going to find is that Vanguard and BlackRock, who are index funds, they're passive investors. They're never going to want to influence. They're not going to demand a seat on the board. They're not going to send any nasty letters to the CEO. They're going to be passive investors. They're going to file 13Gs. So Elon Musk was filing 13Gs, and his total number of shares went up. So he must have been awarded some shares by 2%, but his actual ownership is 21% now. I don't have the prior ownership here. I only have the current ownership and the change. His actual percentage of ownership went down by 5%. So that's what this means here. Now we're going to go down to the 13F and import filings. These are required 10 days after a significant change, or if it's a 13G, typically once a year around February 15th. So you can see a lot of these came in around February 15th. So you probably won't see updates of these again for another year. Now, the 13F and the import filings are made for a different purpose, whereas this is here to determine who are significant owners and who is influencing the company. This is basically tracking funds. So if you're an entity that has over $100 million in assets under management, you have to file a 13F. Or if you're a mutual fund or an ETF in the United States, you got to file an import filing, which is what this is. And these are due quarterly. The 13Fs are due on a calendar quarter, The import filings are due on a fiscal quarter. So you find the 13Fs typically come in 45 days after the new year or after the end of the quarter, and NPs come in at the end of the month every month, okay, because they have kind of different fiscal year ends. So you're always going to see new information on Fintel, especially with the NPs coming in. This is basically showing you the fund itself, the filing type, the estimated average share price paid. So we basically go back in time and we look at how much was bought at each quarter, and we look at what the average price was for the company at that quarter. We do a best effort to try to figure out what is the actual price paid for each fund or institution for those shares. Here's the total number of shares that they have, change in shares, the value that they reported, and some changes in the value. And then we actually have the portfolio allocation. So here's Nuveen NASDAQ 100 has 5% of their fund dedicated to Tesla. You can actually click in here and get a drill down. So I'm going to click on this little arrow, and it's going to provide me with more detail here. So here we have a 1-to-5 split. That was as of August 31st. So jumping from one of these to the next should cause us an issue, but I think we'll just kind of go through this right now. You can actually see a lot of detail in here on the changes in allocation. If you're a numbers guy, you can pull this in and do your analysis. This is the long positions. If there were puts and calls, and you would also be able to see those. And we can kind of tease out the unrealized gain and loss for these funds and the rolling cost basis here. So we believe that this fund, Riemann Capital Advisory Group, has got a $2.5 million unrealized gain in Tesla based on the average share price that we calculated from their historic. So they had shares all the way back in 2016 at $44 a share. And you can see each quarter they bought more shares, but their average share price paid went up significantly each time. So that's kind of how we work this out. This is actually really interesting. We put a lot of work into this in calculating the average share price paid and trying to figure out what the cost basis was and the unrealized gain and loss. People talk about hedge funds getting taken advantage of by AMC shareholders, but the reality is, if you look at Vanguard, you dig into the detail here, just as an example, Vanguard had a $1 billion unrealized gain in AMC shares, right? So they're not losing money over the whole meme stock thing. They're actually making a lot of money. As of 2021, they had a $1.9 billion unrealized gain in AMC shares. So it's pretty interesting there to see kind of what these companies, what these funds are actually making on a lot of these issues.